Alright guys, hope everyone can hear me and see me properly. We're doing another live stream today. Going to be talking about the macroeconomic outlook, some of the stuff that I talked about with Michael Howell in my last podcast, talking about liquidity. And in that regard, also talking about Bitcoin, which of course, has made very big moves in the last few weeks. A lot of people have become a bit scared with this drop, but nonetheless, I do still think that this is probably the best time to buy Bitcoin. Great opportunity to buy this dip. We'll talk about the more immediate future of Bitcoin and also the long-term fundamentals as to why I think that Bitcoin is going to do very well, which ties in quite nicely with the chat that I had with Michael yesterday about liquidity. And then we're going to go over some charts and look at some of the stocks that have been moving in recent days. Intel, Tesla, stuff like that. We'll go into TrendSpider and do some market scanning. But let's begin now by looking at basically the economic calendar for the week. Now we did have Jerome Powell give his testimony yesterday. We'll see him again today, talking about inflation, all that stuff. For the moment, markets didn't get too spooked. Kind of usual rhetoric with him. Now, the real, of course, Powell always says data dependent, and data is what we will get on Thursday. That's what everyone is going to be looking at, is that inflation rate, both core inflation rate and inflation rate year on year. And, this is going to be very important to determine the outlook for interest rates, right? So, for the time being, no one is really, the possibilities of an interest rate for the July meeting are pretty low. The biggest chart, however, we do pretty much have a rate priced in according to here the CME watch for September, with about 73.6% expecting a rate cut by then. So they'd expect a 25 basis point rate cut by then. Now this is not very big, but it will have some significant effects on liquidity, and that's something that I want to talk about today. Now, I had a very good chat the other day with Michael Howell. You can see it here. We can watch it on Substack, or you can also watch it on YouTube. Now, he is basically really knowledgeable when it comes to liquidity, which I've talked a lot about before. And basically, I think is one of the most important markets. By liquidity, we basically, in this mean the pool of money that is available to buy assets. So a lot of people talk about Fed liquidity, and we have the formula for Fed liquidity here, right? It's the Fed balance sheet minus Treasury General account minus reverse repo. So you've heard me talk about this before. Obviously, when the Fed does QE, that increases the balance sheet, increases the money, quote unquote, chasing assets, to kind of very simply. Then we have the Treasury General account, which again I've talked about. When it's tax season and the TGA fills, that's actually draining liquidity. When it empties, which is actually what we're going to see now, it's actually additive for liquidity. And similarly with the reverse repo, okay? Now, here's the thing though, we talked, and first of all, well, why is liquidity important? Well, you may be familiar with this chart already. As we can see, Fed net liquidity holds a very strong correlation with the S&P 500, especially in the last few years, but going back even more so, okay? So we actually see that, markets top with liquidity, and then they bottom again in 2022 as liquidity bottomed, okay? So it is a very important factor. Now, Michael talks about global liquidity, which includes different, not just the Fed liquidity, but also highly driven by the PBoC, and also important, which is the MOVE index, that volatility of bonds. It's like the VIX for bonds. Now, why is this so important? Well, one of the things we covered is that the liquidity cycle actually is a lot more important than, let's say, the business cycle. To this extent, if we look at this chart, we can see that the amount of debt that needs to be rolled over is actually much higher than the amount of new debt that is coming into the system, right? So really, the problem that companies face isn't necessarily buying new debt, but rather it is, it is rolling over that debt, right? So I just want to check that that the live stream is working. I haven't done these in a while, so just want to check how this is going. Okay, it seems to be working. So, to this extent, it's a lot more important to refinance debt, and the obstacle to refinancing debt is liquidity, which means he mentions this balance sheet capacity. Anyway, it all gets a bit abstract. What you really want to see in practical terms is this global liquidity cycle, which, as we can see here, from about the 1960s, has pretty steadily, although it's not a perfect measure and it doesn't hold an exact correlation with the S&P. It's a pretty good correlation, and for the most part, it does follow this kind of 65-month cycle. So that's about 5 years, I believe, 5 years and a half. And this would actually have the liquidity topping out around 2025. Okay, so Michael actually believes that we're pretty close to the beginning of a shift of this liquidity cycle, and that therefore we should probably see things rallying over the next few weeks. Now, this brings us to the more immediate outlook for liquidity, because we do, like we said, the Federal Reserve does seem to be close to cutting. Now, here's the thing, right, about the interest rate. Even if we do get a cut, now, the interest rate itself, cutting 25 basis points, won't be very significant for the won't be very significant in terms of liquidity. I do think that it will really help expectations in terms of changing, in terms of probably reducing that bond volatility, that move index that we've talked about before, right? So we can see here the move index. And how it's been trading now. It has been coming down, but basically I think this is clearer if we look at this on trading view. So I do think that there's some room with the Fed rate cut to get that move index to come down even further, right? Which of course that would basically mean that the volatility for bonds is lower, and that is additive for liquidity, right? It means that the collateral, so to speak, is being used more efficiently, right? So I definitely think, I don't know why this doesn't really go back as much as I would like it to, but anyway, as we can see, I think that basically we're now ready to move down in that move index with this Fed rate cut. Now, the other thing that's important is the PBoC. Now, this has really been an obstacle for liquidity, and the reason is, as we can see here, that the Bank of China, the People's Bank of China, hasn't really been able to be as expansive with its monetary policy, mainly because of this relationship between the dollar and the yen, the yuan rather. Okay, it's not, it's been depreciating, and that isn't something that China necessarily wants. So as we can see, that's kind of limited the actions it can take. Now we'll see how this goes. Basically, what we'd like to see is the dollar begin to fall, something that I have been looking at for the last few months. Okay, we've formed now, like, again, we're failing again at this level. In terms of structure, I think it's a ABC that we have here, right? Where we could have gone a bit higher in the speed, but I do think that we have enough of a complete structure here, right? Where this is an A, that's the top of our B, and now basically we're going back down in another ABC, and we have a pretty good setup now to go low in the dollar. So a lower dollar would be great for liquidity because A, of course, it would help risk assets reprice them in terms of dollars, but it would also allow the PBoC to release more liquidity, and that is of course pretty good for stocks. Now, how does this translate into our portfolio? Well, the simple fact of the matter is that if you want to get exposure, so to speak, to higher liquidity, if you agree with Michael and with myself that liquidity is going to move higher, then Bitcoin is perhaps one of the best measures of liquidity. Michael talks about it acting like exponential gold as a kind of monetary hedge, and we can see that Bitcoin again does hold a strong correlation with here the global liquidity composite. So again, you may have seen this chart flowing around. Now, there's more to the story about Bitcoin as well. Fundamentally, there's a few more issues that are going to pull demand up in the future. But before that, I want to zoom into what we've been seeing in the last few weeks. I want to go over this thread by Willy Woo because he really covers it very nicely. So here's an interesting chart that he puts up. Basically, a lot of people have been talking about the sales by German government, okay, about 10,000 Bitcoin. But Willy Woo points out here that paper bets, so this is what you might people call like open interest. So speculative positions on Bitcoin created an extra 140,000 Bitcoin. Okay, so while the spot supply has remained flat. Okay, so basically, even though yes, the selling pressure of the German government has contributed, I think there's a big element of basically a lot of these levered bets on Bitcoin getting squeezed and therefore creating not a short squeeze but a long squeeze, right? So in the same way the short squeeze pushes the price up of an asset, this long squeeze has pushed down the long squeeze has pushed down the price of Bitcoin to these levels. Okay, he also looks at the Bitcoin risk signal chart here, which basically isn't calling for a bear market yet. Don't ask me exactly how this Bitcoin risk signal is calculated. I'm not that sure, but nonetheless, it definitely has had some accuracy in the past. And then if we expand this a little bit further, the other chart I wanted to show, yeah, we can see here basically the heat map of liquidations, right? So liquidations, this is what I was talking about before, right? So before we had a lot of people that had gone long around these levels. So you normally see people go long, right, close to recent lows, which they use as support, right? So what the market does when Bitcoin sells off, it sweeps those longs, okay, eliminates that excess leverage, you could call, and then basically now it's ready to move again, right? Where to? Well, again, it's hard to know exactly where. We do know that we have, of course, short volume here that could get swept at around 77k near the high. So again, if we reach these levels, we would probably get squeezed up. But before that happens, we could even try and retest this 50k level. Again, this is an area of volume that we've seen before Bitcoin consolidate. And of course, we also have a certain amount of interest there coming in. Okay, so it is possible that we get a final sweep down into that 50k. But again, overall, I do think that, whether it's now, where's it 50k, guys, this is the time to accumulate. I wrote an article about Bitcoin and, basically covering the fundamental reasons why, and I'm going to break it down pretty much in as simple a way as I can, and that is that there are three main drivers of demand for Bitcoin. I would call those institutions, which is old news by this point, nations, and then younger investors. Okay, and I'm going to show you some charts that I think you might find quite interesting. So first of all, obviously institutions we know are starting to adopt Bitcoin. In fact, interestingly, I think Willie Wu also has a chart here where he shows the accumulation by ETFs. Very interesting to see. The grown-ups, as he calls them, are buying the dip. So we're seeing more accumulation in these Bitcoin ETFs as the dip happens. So very interesting to point that out. But nonetheless, what I'm talking about here is obviously institutional investors. There's about 60 trillion in assets under management. And we're also seeing the likes of MicroStrategy, Tesla, different US companies starting to hold Bitcoin as a reserve asset. And that's about 6.9 trillion in cash reserves that that are available in terms of those reserves. Now, the other thing that's interesting and that's really been good, that has really come to the light in the last few weeks, as Germany has been saying Bitcoin, is whether Bitcoin should be held by nations. Now, we know that El Salvador is already doing this. And the funny thing is that when Germany was selling all these Bitcoin, a lot of people, or at least a few, I know that a few MPs in Germany, some politicians, were saying that, perhaps Germany should not be so hasty in selling and in fact try and keep some of that Bitcoin. And we also know that Donald Trump, obviously, Donald Trump says a lot of things, but he did talk about using Bitcoin as a strategic reserve asset. So we do know that he at least said that, possibly the next US president. I'm not going to get into politics right now. In any case, we know that this is happening to an extent already, El Salvador, for example. So this is already a big amount of, again, a big source of demand that could come in to Bitcoin, maybe not in the next 5 years, but 10, definitely. I think we could start seeing people and even countries diversify into this, right? That's about 11 trillion, according to Statista, that could be going into the Bitcoin market. Obviously not the whole 11 trillion, but there's definitely, a good amount going in there. Now, here's the most interesting thing. and that is that baby boomers, right now hold half of the nation's $150 trillion wealth. However, this is slowly going to start coming down to Gen X and millennials. According to this research by Bank of America, there's about 84 trillion that will be passed down to younger investors. So that's 84 trillion going into the hands of younger investors. This means that we'll definitely see some kind of a change in how this wealth is stored and invested. In this regard, we can do a qualitative analysis, and basically this is what Bank of America did. It went out and asked about investor preferences, and as we can see, there's a big difference between what they buy. Investors from ages 21 to 43 favor real estate investments, and second to real estate investments with 28% is crypto and digital assets. So again, we have all this money going from the older generations, from the baby boomers, that will be passed down, especially towards millennials, but also Gen X, that basically have a much broader, much higher preference for crypto and digital assets. So again, that's 84 trillion. And in this regard, we could be looking at multiple trillions that could end up in Bitcoin. Okay, so definitely something worth considering, guys. So that is my opinion on Bitcoin right now. And again, I think long term, it's definitely something you wanna keep an eye out for. So if you like, we can now look at the Bitcoin chart real quick to kind of look at how I'm looking at playing this, right? So first of all, if we zoom out to the daily chart, I still believe that we are forming this 5-wave structure, and we are basically looking at eventually in the nearer term hitting that 100k level. This is the trend line that we have forming from the tops we made back in the previous cycle high in 21 and 22 and 2021. We also have the 1.618 extension takes us to about 100,000. That is, if we measure how the retracement in Bitcoin from the highs to the lows. Let me zoom out to the weekly so you can see that a bit more clearly. Okay, we can see that coming down. So if we measure this, basically using Fibonacci retracement, that takes us to about 100,000 for the 1.618 extension. Okay, so definitely a very important level to watch. Now, in terms of what we have now, if we count this as a 5-wave structure, we are actually now just around the 31.8% retracement in what I would call a wave 4. So we had low, up, low, an ABC structure, and we're now basically finding support at that 38.2% retracement, or here this is the 61.8 extension, but that is the 38.2 retracement. And basically, I think this level could hold. Now, if we look at the daily, it's interesting. Obviously, we did break below the 200 EMA. Something that we have seen happen before. We are now back up above it, which is obviously quite encouraging. But really, there's nothing to confirm the bottom unless we really break, I would say, at least the $60,000 level. And we haven't quite seen. I would say I would like to see a 5-wave impulse. We did see a good divergence here with the RSI, where the RSI, as you can see, made a low here, but didn't make a lower low, while the price was making a lower low. So that is definitely a good signal. And we're also about to witness a MACD crossover. So again, at this point, I think that, I think a lot of people may be looking at a final low at 52, 53, 50K perhaps. But again, I don't think that's necessarily going to happen. I think that, people are buying Bitcoin right now. Institutions are buying Bitcoin. The ETF inflows keep happening. And, I think that, like I said, this is a good time to buy. So definitely want to see some more confirmation, but again, good signals here from the RSI and the MACD in Bitcoin. Okay, so definitely an interesting time. Now, a couple other stocks that have been moving a lot. I wanted to talk about Tesla. This is one that I talked about a while back. We were definitely looking at this one to break out, and it has. Okay, we can see that this has really taken off, and now kind of really this on the log. I want to put this on the log chart. So this is actually broken above now this initial level of resistance. So I was talking about this bull flag when we were down here. In terms of structure, this looks pretty clear like an impulse. We've got a 1, 2, 3, 4, 5. So now I would say that we're probably going to come down and test this resistance. And if that holds, we could definitely go a bit higher. Now, interesting to note that June typically is a very good month for Tesla seasonally, right? We can see, June is over, rather July, with a 13.6% mean appreciation over the last 6 years. August also pretty good. September, not that bad. This is over the last 6 years on the seasonality index. And we can see actually that, obviously this rally has also been accompanied by some notable upgrades in terms of analyst estimates, with quite a few upgrading to buy in the last 2, 4, and 13 weeks, we can see here. Now, the other one that has been making moves, and one that, I bought the dip in, I wrote an in-depth report on Intel, and it's finally kind of broken out a little bit. It is now finding resistance at that 34 level, but quite encouraging to see this breaking up. We've seen some a good crossover here of the MAs on the 4-hour chart, and in this case we haven't really seen much of a move. It's interesting because we've seen moves in stocks that are kind of AI related, although Nvidia has been actually kind of underperformance. Another stock that has really been moving, and one that I've always said is my favorite, is Google. Really kind of grinding up in the last few sessions, and kind of approaching this upper target that I have here. So I would expect a pullback at some point, but again, this is one that I would say you want to buy whenever it hits that any of these moving averages. Definitely one that you want to keep an eye out for. And with that said, I just wanted to go ahead and run some market scanners while I have you here. Let's see. So I like to run some of these market scanners to look for potential buys in the S&P. We have this one where I'm looking for a bullish cross with the 20 and the 50 MA, and I'm also looking for an RSI divergence. So this one's interesting. We have CINF. Okay, so we're seeing that this is giving us a bullish cross. Bounced nicely over the 200 EMA. It's holding that nicely, and you could say that we have a kind of a wedge here forming. So again, this feature is quite useful to look at different options, different things that come up. Okay, it just makes it a lot easier to kind of find these trades. Okay. We can also look at this one, which is looking for RSI divergences. So it's looking for both bullish and hidden RSI divergences. So for example, T-Mobile here giving us a bit of a divergence. So this is quite interesting. I was looking at, do I have one? This is MACD divergence. I should really do one where I get the MACD to cross up. CrowdStrike, this is one that I really like as well. Of course, it's very overvalued, but again, we're finding support now here at the 20 EMA. We do have a kind of a hidden divergence. RSI making lower lows, price making higher highs here, higher lows here. So I think we definitely could see a continuation in that. Yeah, I think I'm going to leave it at that for today. I think we did well covering all that stuff on Bitcoin. Definitely going to be an interesting week ahead with that CPI report. We're going to get more data coming in later on. And as always, guys, first of all, if you want to see more of my stuff, you can on Seeking Alpha. If you subscribe, you can click a link on the description. You get a 20% discount to Seeking Alpha. Get access to all their cool features. I did do a video talking about that the other day. And of course, please consider subscribing to the Substack. I do a lot here: technical analysis, talk reports. I always do some free stuff, but most of the good stuff is paywalled. Of course, I have my swing portfolio, my in-depth macro reports, and my macro ETF portfolio. And I now also have, where's my? I also have my end of the world portfolio now available. I should pin this up here really. So please consider checking that out. All right, guys, I hope you enjoyed this, and I'll see you again soon.